I think what we are seeing is that there were some initial market expectations that the BOJ may do something for Kuroda's farewell meeting, but in fact, the fact that there were no changes, I think markets were slightly disappointed, but they didn't overreact, and we saw the dollar yen still holding below the 137 level. So I think going forward, it will still mean that it may still be relatively driven by the dollar side, especially if the US non-farm payrolls as well as the inflation data shape the dollar movements. I think that could have a more important bearing on the dollar yen going forward.
But what do you expect the near-term range to be, foreseeable term range to be for the yen?
Well, I think for the week's high is somewhere close to 138. I think if the non-farm payrolls come in better than expected, with average hourly earnings going higher, I think that may still mean that the labour market continues to be fairly tight in the US, and the US may hike further, placing some yield differentials into play, and I think that may cause the dollar yen to test closer to the 138 level in the near term.
I've got to ask you though, because we've obviously had what's been happening when it comes to the banking sector in the US right now, and obviously the Fed is going to be data dependent. They're going to look at the NFP, they're going to look at retail, they're going to look at the inflation print. But do you think that because we saw the odds shift dramatically just overnight in terms of the expectations for 50, do you think that if we do get even a hot NFP print, or even, because if you take the 500, you take the 200 expected, you're averaging out of the 2-month SAR at around about 330, that there's going to be a little bit of reticence from the Fed to move to 50, considering that we are starting to see, even if it's on the speculative side of the banking system, the cracks starting to appear?
Yeah, I think if we have looked at what the world economy has undergone over the past 20, 30 years, many of the economic crises come from all these financial sector issues. So we can't totally discount the fact of some of these risks rising, especially from the crypto space that's spilling over to some of the banks at this stage. But I think in our base case, we still expect that the Fed will still consider that the labour market is still fairly tight, and price pressures is still what they are focusing on at this stage. So at least 50 basis at least a 25 basis point rate hike is our cost scenario. But I think we can't rule out the fact that they will still consider a 50 basis point rate hike, especially if the inflation data is better than and higher than expected.
Is that your biggest concern, that it's going to be inflation and not the NFP? Because obviously everyone's going to be looking at the NFP this week, but do you really think it's the inflation print that they're the most focused on?
Yes, I believe that no matter what, I think they still have to focus on their core concern, which is on inflation. But at the same time, the labour market data does give them the degree that they can focus on inflation. So if labour market data continues to be relatively robust, then it gives them 100% leeway to focus on inflation.